Joining me now to discuss two of our market specialists, Keith Fitz-Gerald, Courtney Dominguez. And Keith, where are you on these so-called meme stocks? I think they're compelling, and not just those two I talked about, but the entire list.
Well, I don't disagree with you there, but I tell you what, they're too hot for me to touch. I don't understand the phenomenon that's there. I wish them all the success in the world, and I hope they become filthy, stinking rich. What I worry about is that you can't poke Wall Street more than once and get away with it. They're better capitalized. They've got a lot bigger playbook. So, business-wise, love it, but I'm not touching those stocks because I don't have the chops for them.
Courtney, the NASDAQ has been vulnerable really since late last year, right? It's been mostly sideways. In fact, it's been down a little bit. The last 2 weeks is showing a lot of resolve. Even today, it climbed off the canvas. Can we say that growth is back now?
I'm always going to have growth in my portfolios, but it's still not where I'm looking for opportunity because you really want to think about this longer term. And despite the fact that value has actually been outperforming for the last 8 months, it's actually become cheaper, and it's actually the cheapest quartile it's been. And so that forward looking is actually very positive. So it's one of those things where you want to win the war, not just the battle. And I do think looking at value over growth is still really attractive here.
All right. And Keith, I was checking out where your most recent podcast, you made a case for dividends. I really never associated you with dividends, so share some of those thoughts with us.
Well, sure. Cold hard cash is very, very appealing in an investor's portfolio. And one of the things we know from history is that dividends account for a huge portion of the wealth you build over time. So it's a promise from management that they're going to live up to their expectations. I'm very happy right now when I'm worried about what's going on Wall Street, worried about what's going on inside the Beltway, to start looking at companies that have got long, successful track records of growing their earnings because I know it's going to grow mine.
I want to ask you both about, as we've got a minute and a half to go before the end of the show, going into the close, Courtney, some things you're looking at, some fresh ideas perhaps for the audience to consider.
Yeah. And Charles, I know the last couple of weeks we've been talking about emerging markets, so I won't discuss that any further here, but I am still looking at your foreign companies here, and I do think your developed markets are something really interesting to look at, because I really don't think you can discount the fact that Europe is actually expected to grow faster than the U.S. next year. Dividends are actually more attractive, and valuations are cheaper. So the Vanguard has a couple exchange-traded funds for this, but the Vanguard Developed Markets exchange-traded funds are a really good way to play that, and you get some good quality names in there like Samsung, Toyota, Nestle. There's a lot of really good foreign companies to get that exposure.
All right, Keith, I thought you weren't afraid of anything, so I found out today that there are limits to your bravery when it comes to the stock market. What do you like here with just 20 seconds to go?
Well, I like J.P. Morgan right now. I thought Jamie Dimon's comments on the Hill were right on target. I think that he's right. If he's cautious, I want to be a little cautious as well. Banks are going to benefit as we go forward, and he's leading the charge.
Oh, man, watching Jamie Dimon and Elizabeth Warren and some of these other folks, that is priceless theater. I'm waiting for Broadway to open up, but until then, keep having those hearings. Keith, Courtney, thank you both very much. All right, folks, we're